There are several reasons I like to use charts and tables to analyze the economy or a company. One of the primary motivations, aside from the desire to share personal opinions, is to spread awareness and encourage people to think critically. It's not important that you agree with everything I say. I just want viewers to become inspired to think for themselves. With the exception of finances about free stuff like education, healthcare, etc., people generally recognize when they're being lied to. And I am so tired of being lied to. By the time you reach my age, you'll have heard just about every lie in the book. And this is kind of what the past few weeks have been all about. Aside from the politicians, the mainstream media and the business pundits have all been chattering about the state of the economy or companies and why we are going even higher. Lies, lies, lies. But then the government, the WHO, the CDC, all do a 180 and decide to drop the honest hammer on everybody. Immediately, the complacency evaporates and the markets tank. For those of you who've been watching this channel, we've been talking about being cautious for several weeks now, and I hope I gave you an edge over the rest. But the big reason I use charts is charts don't lie. So let's take a look. Looking at this chart, you can see that we've come from the extreme greed and are entering extreme fear. And also note in the bottom portion of the chart that when we moved into extreme fear in previous periods, we remained there for at least a few weeks. So don't feel the need to buy, buy, buy. Practice your patience, pick your spots, and be prudent. If you really have the overwhelming urge, maybe just move slowly into a position. And perhaps listen to economist Mohammed El-Arian, who recently stated following the sell-off, resist. As hard as that is, resist to simply buy the dip because that may have worked in the past, but it might not work now. And in early February, in a guest column, El-Arian said the spread of the coronavirus was likely to snap investors out of the buy the dip mentality that had proved highly profitable in the years since the global financial crisis. He argued that the impact of disease spread of COVID-19 would pose a significant threat to global economic growth. Moreover, the threat to both the supply and demand sides of the global economy would be one that global central banks would find difficult to counter. So, for the remainder of today's video, I just want to go through some recent charts and take a look at what damage or opportunities there may be. So, let's take a look. And we'll start off by looking at Royal Caribbean Cruise Limited, RCL. I don't hold any shares of any of these companies we're going to be talking about here. And for the last couple of years, RCL has been pretty volatile. Down, up, down, up, down, up, and down. We're at this level here, kind of testing the level that we had in late 2018, and the top is at that point there. So a pretty wide channel, but a channel nonetheless. Looking down here at the MAC, we've had the fast line reflect back off down toward the zero line, but it's still above that zero line, so that's real encouraging. It might go below, but as long as it stays within that reach of zero line, we're going to be fine. Now, the histogram definitely shows a very long-tailed red line down here to that -2. So basically that means things are weak. Well, duh. Here into the price rate of change, and I think you'll find a lot of these oscillators have these moves that are down, hard down, and that's what you're going to find in a lot of stocks. But that means you have some time. Here into the relative strength, pretty good downdraft, as well as in stochastics, and then into the Williams, all the way down to a hard -100. So just watch, be patient. Back up here to the price chart. You definitely have some time. So if you really, really, really have that urge, just move in very, very gently slowly. Take your time. All right, let's go to the next chart. And this chart here is the 20-year monthly chart on National Oil Well Varco NOV. We've not talked about this stock before, but it's in the energy sector, and there's a lot of stocks in the energy sector that are looking very, very similar. Important points, this is the bottom in 2008, and here we are testing that once again. We go here into the MAC, you can see that the maximum negativity was there in 2016. The level we're at here is actually slightly above where we were in 2009. I really like this formation here. We're much closer to that zero line, and the fast line really does want to move through that slow line and head on up. Didn't have as negative of a downdraft as Royal Caribbean. Into price rate of change, actually it looks like the fast line wants to head up. A lot of these oscillators are looking pretty good, showing a lot of bottoming. Now, with China having such problems, oil is going to be soft, so be careful. But these oscillators look very encouraging. Back up here to the price chart on NOV. One last look. It's testing this level that it had in, say, mid 2019. So that's very encouraging that we're still above. It might go below, but I don't think that's going to be a big concern. In my humble opinion, there's going to be a rotation back into energy. So take your time. Let's move to the next stock. And here we are yet again looking at Berkshire Hathaway, the B shares. And we had a negative day, down 3.64 or 1.64%. Not too bad. This is a very nice chart from their 2009 heading on up. But what would you expect for Warren Buffett? Moving on down here, very interesting on the MAC. You had the bottom there, like you had the bottom here. And you have this little fish hook here, like you had back here. Very similar. Now this fast line may go through the slow line here depending upon what happens in the next few weeks or so. But we're so far above that zero line, there's a lot of strength in there. So I expect this stock to do relatively well compared to a lot of the other stocks. Histogram looks good. Price rate of change. Fast line went through, but we're still near that zero line. A lot of strength. That shows here in the RSI as well as the stochastics. And lastly, into the Williams. Staying above that 50 or midline, a very strong stock. Back here, one last look at the price chart, and then let's go to the next stock. And so for our last stock, we'll look at ABV, the symbol ABBV, and I've switched to the 2-year weekly chart. And I want you all to check the weekly charts as well as the monthly. And looking here at ABV, we've had a pretty strong downtrend here in the last couple of days, but there's not much damage here. 89.18 was a close on Tuesday, still above the 20 and 50 EMAs. Now, what you'll find in a lot of the MACs is the fast line looks like it's going to want to go through the slow line, and it may be through the slow line in a lot of different stocks. But check to see how far above that zero line it is. If it's still above positive territory, there's some strength in the stock, and that's what we find here with ABV. Definitely strengthen the stock above that zero line. Moving on down here, same thing in the histogram. Price rate of change looks like it's heading on down, but it's near that zero line. Into the RSI, same thing, 50 midline, still above that. Stochastics, well above that midline. Into the volume, can't say much from that. And then the Williams, right there at that 50 or midline. Look for your stocks to be near those midlines, and if so, there's some strength. If they're much further down, like Royal Caribbean, that shows some softness, so just be careful. Back on up to the price chart on ABV. One last look. Still looks pretty decent to me. Heading on up. Let's just see where this stops, this downtrend stops. Is it going to stop at the 20 EMA or the 50 EMA? To me, as long as it stays above 80, then you've got a good strong stock on your hands. So No matter what you're looking at, be prudent, be patient. And for today, that's ChewDog Charts. Thank you.